Hey, thanks for the chart, Jim. So we're going to take a quick look at some ideas for adding to the PRX simplified system from Bill and Jeff. And so we're taking a look at daily charts. This is VIXY. And we've got the simplified setup. I believe that's a Z3 Bollinger Bands with the PSAR on the RL10 proxy for price. A squeeze momentum for TTM, and then a 30-period Bollinger MACD with a 430 and a 5 with the EMA. And the PSAR flip rules get us in here with a tight stop, and that works all the way to this exit, and of course you're happy on a move from 900 to 1400. What I notice is that the real excursion from the Z3 previous pinch occurs right here at the open and that thrust. That one to me is a natural second position. You get a strong close. The brilliant gift of this move is not atypical in the volatility ETFs. And after a quick peak, this one feels like if you had put the second gift position on, that you take that intraday with just a money management stop and you're happy. The next day, when you see that gap down all the way down here and you realize I'm well back into this, you're therefore happy. But if you're committed to this being still in play, which is indicated by a breakout from Z3 in this extraordinary move and the big gap, you know it's still in play. That tight minimum manageable risk box intraday on the 30-minute bar, which is about a frog box, gives you a brilliant intraday move here. The next day you actually get a brilliant move in both directions. This is probably where I exit the entire position, and certainly any residual gift that's left over, because you have a gap down, it resumes but makes a lower high, and then comes back inside the Z3s and closes lower at the bottom of the day. That feels like the falling star, and I don't want any part of that. It's still possible to treat these as individual days. You might get one more day of intraday on the 30 minutes here. If you are abiding by the PRX rules, this just drives you nuts, because you realize that all of that could vaporize and come back to the PRX stop down here, and you have nothing to show for that open. I would suggest that any excursion past Z3 come with an automatic profit preservation of keep 70% of the gains, which might have given you an exit somewhere in here. And that's not materially different than the exit that's over here, but it saves you from 15 days of exposure to those kinds of gaps, which can also be adverse gaps. Now, what I would also consider adding is a 3-period moving average of the RL10, so you get the equivalent of the baby dragon. And then where that actually crosses over is probably up in here, because you have leg 1 and leg 2 and then a rollover. And now where that RL10 comes back inside the Z3 is probably where the indicated exit is. The next day you get the exit at the edge of the dragon, which I also advise in order to protect against a sell-off to the PSAR. And that exit here is even better than the one that you get 5 days later on the PRX. Now, this is not to disparage the PRX, which keeps you in multiple positions, not just the volatility. But my spider sense is that the volatility dynamics of these amazing urgent moves are things that you want to capitalize on with the idea of second positions, the hybrid form of the 30-minute trade, respecting the gains with the profit preservation, considering when you have abnormal gains of accelerating to the northern skin of the dragon, which is a reasonable approach to letting this thing run while it's still available. And you always know where that limit is, and even on an intraday surge you could get out, such as this gap down would get you out, and that's as good as that one anyway. Now, I would also notice that the PSAR flip gives you a trade, and then this bottoming tail would get Robert Gardner's attention and probably get us in either here or there with a stop down below that bottoming tail, and you get to enjoy that move. The PSAR flip happens here anyway on a COTA 2 with a higher low in the RL10s and something like a stable sideways channel being developed at the new price level. So the PRX entry would be here with the stop down here, and you shouldn't lose money on that trade. But those are my thoughts in general on how to use this. Now, if I come down and look at the MACD, this expansion right here really aligns nicely with this one. You get a return to something like the fall in here. So the easy run in the summer is done. This is all fall until here, and that signal when it goes into the winter, that coincides with that exit at the dragon anyway. So that to me is the move you want. This other stuff is just repositioning and noise, and then you get timed out, and you can see that the size of the bars are diminishing anyway, so that's a return to normal. And this just feels like a 50% reaction against the overzealous move to the upside. And that's what makes the bottoming tail so darn interesting. And then somewhere in here, you also see that the MACD's given you like a summer, fall, and then a return to summer. When it comes back above, that's really a signal that you can consider getting long inside here. And so I think there's an entry in here for the more aggressive play if you're looking to add to the PRX rule set with some measured areas. So that's everything I got for you. Let me know what you think. Take good care.